Today, all eyes are on the OPEC Plus talk. Recall that at the two previous meetings, oil producers failed to come to any agreement due to the opposite direction on oil production quotas. Saudi Arabia is advocating for oil production cuts, while several other countries are in favor of boosting output. Notably, it's unclear who exactly is pushing for greater production volumes. Russia's position also remains unknown. There are rumors that Moscow intends to support Riyadh. Thus, it makes no sense for other OPEC members to go against the world's two largest oil exporters. Their combined production capacity and reserves are so great that even all other oil-producing countries are unable to withstand a price war against them. That's why oil prices have gained some ground. If these rumors prove to be true, the asset will most likely head for the level of $85 per barrel. Otherwise, oil prices could plunge below $80 per barrel. Thus, Brent crude oil futures have been trading upwards for the second day in a row. As a result, the asset added more than 3.5% and rose above the $83 mark, indicating a buyer's strength after a week of range-bound trading. If the price consolidates above $84 per barrel, the volume of long positions will increase further. In theory, this may serve as a primarily technical signal of a shift in the market sentiment. Likewise, gold futures have been gaining value on increased speculative activity, hitting new local peaks for a third straight day. However, given that the yellow metal is extremely overbought and is close to its historical high, this upside momentum may fizzle out in the area of $2,050 and $2,080. In this case, the asset is likely to enter a correction. Importantly, traders may well ignore an overbought signal amid a spike in speculative activity, thus paving the way for further gains to a fresh record high. Market sentiment may turn negative if today's data shows a slowdown in inflation in the euro area. Such news will make investors believe that the European regulator will be the first to start cutting its interest rates, despite recent hawkish statements by the ECB officials. In this case, the currency market will reverse, with the dollar gaining ground. The yellow metal will dip due to its inverse correlation with the greenback, so Eurozone consumer inflation will be the focus of the market participants, and the ruble's behavior over the past couple of weeks has been almost identical to that of oil prices, which suggests that the ruble is dependent on the outcome of the OPEC Plus meeting. If the cartel agrees to cut output, the dollar may move into the range of 87 to 88 rubles. If it leaves its policy unchanged or increased production, the greenback will probably rise to at least the area of 89 and 90. And that's all for now. We continue to follow developments in the financial markets. Subscribe to our channel and follow the news with us. And see you soon.